Good morning to everybody. My name is Harsha Desai, and thank you for the opportunity to speak here at this incredible event. My journey with TEDx started when I very innocently updated my Facebook status saying that there are synergies between healthcare and investment banking. And that got me thinking, because I have continuously been trying to connect the dots of my life and my adventures that I go through. Well, my journey starts when I was in high school, and I decided that I'm going to go and try and become a journalist, and so I did physiology, history, and drama. And okay, we'll let the slides go for their own stuff, and I'm going to carry on. Sorry. So I started doing physiology, history, and drama. And then when I got to varsity, everybody convinced me that I needed to do something a bit more commercially orientated. So I said, let's do marketing. And then I got to marketing and realized that's too fluffy for me, and I couldn't handle that. And somehow information systems sucked me in. And then I got to second year and had to pick an elective. And for all the electives, I said, go finance. So that's where my graduate degree kind of started. And when I was doing information systems, I felt that if there was any industry that could really benefit from medical informatics, from information systems, it will be the healthcare industry. And thus, I began pursuing my master's in medical informatics last year. And after I graduated, I also started looking for a job. And as you remember, when I graduated in 2008, it was the height of the financial crisis. So going for interviews, one of the most important things you had to understand was, what is the subprime crisis? What does it mean to you and I? And how would it change the future of the way we think and behave? And so that became quite a personal thing for me. And although there was a career crisis, I said to myself, these are interesting times we are living in. And I got employed by an investment bank. So that's where I am today. Employed by an investment bank and studying medical informatics. And I am continuously trying to tie these dots together. And today, I have managed to tie my medical informatics to the investment banking world in a rather interesting analogy, which I'd like to share with you. So, firstly, if we look at the if we were to consider Bill Clinton in 1993, he decided that he wanted to provide home loans for people because they could not afford them. And therefore, providing basically households for them. And in South Africa here, we are trying to provide health insurance to people who cannot pay for the basic health care. Then again, if we look at with the government loans in America, we had given it to Fannie Mae, which is a quasi-governmental organization. And basically, when you give it to a quasi-governmental organization, their interest is the state's interest, as apart from the people's interest. So what happened was, although they were given the loans, they weren't very good at managing them. In South Africa, we want to give the healthcare funds to the South African Social Grant Agency, who is actually managing the social grants, and we know that those are not well controlled at the moment. With this, we have the motivation for Bill Clinton to provide these home loans was more for social economic thing. He said, how can I improve the conditions for American people and bridge the economic divide? And so too, in South Africa, we have the ruling party in its 2008 election has worked at motivated the election campaign based on providing these health informatics, on providing a healthcare fund to basically care for people's basic healthcare. Okay, so in essence, it's a good intention, but there's poor oversight over these home loans in the United States, and therefore we start going quite aggressively and we start selling these products. In In South Africa, we know that it's the best thing to do for our South African people because we have a we have a population who's deeply deprived, and we need to cater for them in a better way to make our economy more sustainable. But we do not have the correct infrastructure to do this. In the United States and with the whole subprime crisis, what we did is that we broke up these home loans and we began to repackage them as little bits and pieces, and we created these fancy assets called no income, no job assets, or the CDOs, which were the collateralized debt obligations. But because of the complicated nature of them, people did not fully understand what they were investing in. In South Africa, how many of you in the audience here have a medical scheme? Anybody paying towards? How many of you understand what happens to your to the funds that get debited from your bank account once a month? We don't. And when we have to try and reimburse ourselves after we go to the doctor or whatever, it's a pain and a hassle to get that done. And we all understand that. And when I started investigating the financing of the healthcare in South Africa, you will see a spaghetti of flows to finance this healthcare, and it's actually deeply disturbing. And you and I, ordinary people, do not have the time to go and interrogate these things. So, which leads me to the next point, which is we actually sold this to ignorant clients. People did not understand what they were buying, and the banks did not disclose to people what they were purchasing, which created a ripple effect because we spread these bad debts to everybody out in the economy. And in South Africa, what we're doing is we're ensuring a population that does not understand the proposal of the National Health Insurance Scheme. We do not completely understand the effect of taking our tax revenue, putting a further burden on it to fund a population that cannot contribute to that tax revenue pool, and therefore we are going to be increasing our national account deficit, which will have other effects on our economy that even this National Health Insurance Scheme is never going to be able to fix. So while I've discovered that there's this analogy between healthcare and investment banking, and it's one of the fundamental mistakes that the financial industry has made in recent history. And we are still feeling the ripple effects of this as we go into with the Greece crisis at the moment. And it's also exposing the various European countries that are also at fault. So if there are mistakes that these two industries can share, then surely there are lessons that they can share as well. And the first lesson that I draw onto is the proactive well-being. This is my 94-year-old granny, and there are a lot of things that she must have done right in order to be able to reach this bright, bold age of hers. One of them being the fact that from a financial perspective, it's about being able to think about setting up a retirement income. It's about being able to say, let me put down a deposit for a home. It's about saying, let me set up dividend income so that when I retire, I will have some finances to sustain myself. But if we think about it from a healthcare perspective, it's about being able to say, I'm going to go to the doctor to prevent myself from getting ill. It's about saying, I am going to take vitamins to nourish my body now so that I will not have to face the consequences later. It's about eating right, and it's about exercising. The second thing, it's about attracting people. And this is a picture of the Durban Youth Council in 2007. I was part of the Durban Youth Council in 2005. And you start basically when you're in grade 11, and then you taper off at the middle of grade 12. One of our board meetings, I said to the group is, matric is a necessity. I don't have a choice. I'm going to have to do it and get it right. But DYC is a place that I want to be. And that is what investment banks have done very well. They have learned to attract and evoke these aspirations from people like us. And they start that very carefully. They pay for degrees that they deem worth investing in. They give people the opportunity to direct their career paths the way they see fit. They give you the opportunity to take control and to raise the bar even higher and higher all the time. And the healthcare industry has all the potential to do this. They can offer people a career opportunity that's larger than life. And if we can use that, and we can give people the tools that they need in order to fulfill their jobs, then this healthcare industry can also become an attractive place for people to work in. So, lesson number 3, the business model. Now, this is a common sight for all of us in South Africa, and I think also maybe around the world. This man, some of you might be pitting, because he's standing at a road intersection and selling, and he's the guy who's disturbing you while you're driving. But I'm actually quite proud of him, because he does not see himself as a charity case, and healthcare needs to stop treating themselves like a charity organization. At the fundamental, an investment bank is a meeting of lenders and borrowers, and a hospital is a meeting of doctors and patients. Borrowers come to lenders because they want a competitive rate, a good service, and they want to be able to ensure that, be able to transact online, be able to go to their branches and deliver their services, whatever the case is. But it's that offering that we need to translate into our hospitals. Patients want to go to a hospital that's clean, where there's a doctor that has the ability to actually deliver the service that they are providing. They're not going to be overcharged for their rates, and that is what we need to start institutionalizing. And healthcare needs to realize that there needs to be a service that people are willing to pay for and understand that standard. But at the fundamental level, it's it's about becoming the service provider of choice and the employer of choice. And that's what we need to get right in the healthcare industry. Lesson 4, innovation. If an investment bank thinks about innovation, they are offering a person an opportunity to purchase a bond. But if they hedge that bond with a swap, they will be able to give their customer a better return for their money, and therefore their customer will come back to them. If the healthcare industry, for once, if the healthcare industry could translate that innovation, they would say, I can spend 20% of my budget treating 80% of 80% of the population for preventive healthcare. And that will enable the hospitals to be able to manage their care of their patients in a better way than we do currently. We're always reacting to the requirements of the patient, instead of saying, if there's this TB patient, if there's this diabetic patient, if I treat them properly now, I'll face less consequences later. And that's what we need to get right. So it's about thinking about the future returns. That's the innovation we need to bring. Lesson 5 is about cutting the waste. It's cutting away the non-value adding activities. So make sure that everything you do is going to be able to contribute to that revenue or to that goal or that objective that you're aiming to. If we look at the investment banks, they trade online, they get the Reserve Bank to print their money, and they have Reuters and Bloomberg to disseminate all the information for them. If the healthcare could once, for a moment, if we step into the issues and start thinking for them, why not get all the suppliers to bid online to provide products for the healthcare institutions? Why can't we give away the electronic medical records to the patient? It does not belong to the hospital anyway. It's not their legal holding. And what about cutting all the communication and layers of detail between the patient, the hospital, and the insurer? Those three people get caught up in a big tangle, and I think we can all experience the mess that goes around when you need to resolve a payment with our insurance company or the hospital when we need to. So it's about cutting away the non-value adding activities. So what we've seen is that there are various lessons that we could share between these industries. And I painted quite a gloomy picture of the National Health Insurance Scheme, which is very important for South Africa because we really need to start concentrating on how to treat the people. And for that, I've basically outlined 6 factors to counteract all the mistakes that we have made that the analogy illustrated in the beginning. Firstly, it's about being able to understand the risk of financing HIV/AIDS and TB patients. If we understand what that's going to cost us, then maybe we can create the model in a more efficient way. Who do we want to manage that money? Who do you want to give the entire healthcare budget to manage? Do you want to really give it to the social security grants who just want to dish it out like it's charity? Or do you want to give it to somebody who understands that we need to pay for the delivery that which we provide? And what we need to be able to tie into that is, if we are creating a healthier nation, that healthier nation we need to have a program for them to allow them to start contributing to the GDP of the country. Because if they're not able to do that, then what are those people going to be? Bums on seats? And finally, then we want to look at, if there's a revenue stream that we are going to be creating, what are these people paying for? What's the service level standard that we're going to provide to them for them to pay for that? Because people need to understand what they're paying for, otherwise we'll just abuse it. It's for free. It's the government's giving it, so let's go get it. That's a mentality which we will entrench into people. We need to ensure that we create something simple. Simple enough for everybody to understand, but efficient enough that it will actually work as an insurance scheme for South Africans in our healthcare environment. And we want to be able to educate and empower our patients and the healthcare workers as part of this process. Otherwise, we will be facing the consequence of them taking this healthcare insurance scheme and not being able to translate it. And basically, I want to conclude here by looking at Greece today.
I'll show you time.
Greece today has a problem because they went over on the national deficit, and the people acted on it, and therefore they are burning the banks, and therefore we need to be able to make decisions more appropriately in terms of where we're going to fund healthcare in South Africa. Thank you.